Welcome to our $1 million baby presentation. I'm going to start off by asking you a very simple question, and that is, what kind of a life do you dream of for your baby? Nothing represents a new beginning more than the birth of a child. The birth of a child would provide you, the parent or grandparent, the opportunity to build and then pass on a legacy that will continue long after you're gone. Now, this legacy includes your values, work ethic, culture, heritage, religion, and a whole lot more. There's also another legacy you can leave that can bring many benefits and advantages to the newborn child as well as to future generations, and that is a financial legacy. With proper planning today, you can provide your child or grandchild with a life full of financial security and stability. Planning today can ensure their college education. You can help them buy their first home, maybe even a vacation condo, and even work on their retirement all by the time that they are 15 years of age. Now, how do we do this? And the answer is by leveraging the power of a permanent life insurance policy called an Index Universal Life. Now, why life insurance? Well, when most people think of life insurance, they think of death. And this policy also has a death benefit. In the event of the death of the insured, the beneficiaries would receive an income tax-free death benefit. However, in the event of a terminal, critical, or even chronic illness, depending on where the actual insured lives, they can actually accelerate the life insurance or their death benefit while they're still alive to help them through what will be more than likely some of the toughest times of their life as well. Now, this policy also has a cash value component that allows for the buildup of cash value, which in turn can be used for any of the many things I described, including retirement, college education, and so on. Now, I'm going to show you here is an example of a child that's not quite 1 year old, so the age is technically 0. And in this example, the parents, grandparents, or both have decided to invest in the child's future, give them that edge in life, if you would, by simply saving $100 a month in the form of a monthly premium. $100 a month times 12 is $1,200 a year. So, as you can see here, right out of the gate, this child has a face amount of $200,000, not just in the event of death, but also in the event of one of the critical or chronic or terminal illnesses I described earlier. So again, they're paying $100 a month, which is $1,200 a year, and they continue that until the child turns 5, at which time they increase that to $150 a month or $1,800 a year. And they continue that amount until the child turns 10, at which time they increase it to $200 a month or $2,400 a year, and they continue that until the child turns 15, at which time all of the contributions cease. This plan now is fully funded. The legacy has been set. Now, as I scroll here, you can see that all those premiums that were paid total up to $27,000, which is also referred to as the basis. That's all the money that was paid into the plan. But then, as you can see on the right-hand side, when the child goes to college at age 18, $12,000 a year are accessed for 4 years to help give the child the education not only that they deserve, but that they require in order to compete in a very competitive job marketplace as well. We continue here down the years, and at age 30, this person now accesses $25,000 to put down as a down payment on the purchase of their very first home. By age 45, $100,000 is pulled out to help purchase a vacation condo. And as you can see, the running total so far is $173,000 that have been pulled out of this plan when only $27,000 went in. And finally, the last thing I'm going to show you here is the retirement income. And in this example, this person would receive $246,561 a year, income tax-free every year until they passed or reached age 120. So as you can all add all that up, and you can really see the power of this plan. So what I'm going to do is I'm going to scroll down here, but better yet, I'm going to go ahead and just add it up for you so you can see the value of this concept and this product. We pulled out $12,000 a year for 4 years for college, which was $48,000. We pulled out $25,000 for the down payment on the first home. Another 100,000 came out for the vacation condo, and then the retirement income was $246,561. If this child lived to be 85, which statistically speaking will live a lot longer, but if this child lived to be 85, that represents 20 years of retirement income. So 20 times that amount is $4.9 million. And then when we add up all the numbers above the retirement income, you can see here that the true number of total benefits received was over $5.1 million, and the death benefit at age 85 is $1.7 million, meaning that this money now goes for future generations, and then the legacy lives on, which is extremely powerful. All of it for the $27,000 that were paid in premium. Now, I want to emphasize that if your child is not quite under 1 year of age, it doesn't matter. If they're older, you can put less money as well. There's a lot of flexibility. Now, I'm showing you here in the ideal situation of a child being newly born. But if, again, you want or you have less resources and you want to save up less, the minimum is only $50 a month, but the more you put in now, the more they will get out in the future. So as you can see here, it's very, very powerful. So you might be wondering, how can this even be possible? And the answer is that we are leveraging several powerful forces here. First of all, we're combining an index universal life insurance policy that I described to you as a permanent life insurance plan, as well as the most precious commodity your child or grandchild has today, and that is time. Time is the most important element because by leveraging the time and some money, it can truly set the stage to give you, your child, your grandchild, and future generations the future that they deserve. Now, when it comes to your child's time, you can either leverage it or you can let it slip away. Your child's financial future and your legacy will be determined in great part by the decisions and actions you take on their behalf today. To learn how you can give your child or grandchild a gift that can provide them with the life you dream for them, simply get back with the person who directed you to this presentation. I want to say thank you for your time and let you know that I wish you and your loved ones nothing but the best in the future. Thank you.